So my current targets are the same. They were 9,500 for the S&P, 65,000 for the Dow, 32,000 for the Nasdaq, and the Russell I raised to 3,800 back then. So, basically 40 to 50% upside from here. A little less than that for the Dow and the S&P, but I'm fully on board with that forecast. Very comfortable with that forecast. Think we're going to see a lot of it in the first quarter and probably spill over into the second quarter. I think it is a first half event, as has been my nature. I raised my silver target from 75 to 100 in my most recent letter that came out last week, first quarter letter. I raised it again to 125. So I'm looking for, still a lot more upside here. And as I said in my letter, because we're in a parabolic, that 125 could just easily be 135 or 45. It's when you get into that vertical, there's no magic to what point it stops. It's going to burn out quickly at some point. The reason I've constantly said it could happen pretty quick is that at some point here, and I think we're getting close to that point, but I thought that before.
3 to 6 months.
We're going to go, we're going to go parabolic. And once you go parabolic, I mean, just take a look at silver. If you want to understand my thought process going all the way back to the teens, back before 2020, where I saw that ultimately we were in a final, last several years of a secular bull market that started in 1982. It would steepen until it ultimately, and at the end, went vertical. Just look at silver in the last few months, and you'll have your description of parabolic. I mean, and that's what I'm saying. Silver went from, I don't know exactly when this was, but from 30 to, now 90, triple in a year's time, or less. So it may sound crazy to say we're going to cover 40 or 50% of the market in 3 to 6 months time, but that's what a parabolic takes you, can give you. And then,
Sorry, just a super quick note on silver for folks, just to give them a little bit of context. I'm measuring it right now, and when it started its breakout on the 28th of November of last year, so 32 trading days ago till the close right now, it's up 73.8%. 32 trading days. So just to give context to what you're talking about.
David Hunter sees a parabolic meltup. S&P to 9,500, 40 to 50% up in 3 to 6 months. Silver heading to $125 to $145, then $200. Copper to $8. The $5 trillion pandemic liquidity surge is still fueling markets.
The dollar, as you know, I have a target of 82 on that. I think it's very close to the end of a 6-month consolidation. Maybe it's longer than that even. And we'll roll over and head for 90 and then probably consolidate again before it heads for 82. Big drop in the dollar will help, I think help. I also think you have an underestimation of just how much is going on in the Trump, not you, but the street, just how much is going on in the Trump agenda. You've got deregulation, you've got the big beautiful bill. There's a lot of things that don't kick in until now. So I think there's a lot of things like that that will be received by certainly the institutions as they see it starting to happen. They're going to become more bullish on that. So, and the other one, copper, which I have maintained a $7 number since early last year. When they announced tariffs in April, or soon thereafter, some tariffs on refined copper, it dropped down. It had touched $6, dropped down to like 4 or 4.25, and it's back up over 6. I just raised my target on copper to $8. So, metals of all kinds, I think, are rolling here. The materials ETF is breaking out and looks like it's got lots of upside ahead. When we look at the Fed balance sheet, In 2008, it was 875 billion. That was the largest it had ever been from 1913. Fast forward through the 2008-9 downturn and the response to that and QE1 and 2 and 3, and you're up to 3.7, I think 3.7 trillion. And then the pandemic hit, and we went from 3.79 trillion. So we have never seen, and that happened over the course of 12 to 18 months, where they panicked, they closed the entire world economy down for a quarter, and they said we got to do something to offset that. So they panicked and printed money like crazy. So you had 5 trillion go into the market or into the system, and that's just Fed money. Well, obviously, other central banks did similar. Um, so we've never had 5 trillion. We never had 5 trillion as a balance sheet. Never mind 5 trillion put into the system in a year and a half. Um, and so you never know. I mean, it's unprecedented. It's nothing we can go back and look at past history. You never know how much of that money, how long it's going to take for that money to kind of flow through the system and be used up. We're still going.
With bonds falling to 3% and the dollar collapsing to 82. Institutions are now piling in. This marks the final phase of the 43-year bull market. Vertical moves like silver's are beginning.
So what that all is that you've had a wall of worry. It comes down as you rally, but it gets rebuilt very easily with a 3, 4, 5% sell-off. And if you get something bigger than that, 10 or 15%, it really gets rebuilt. That allows this thing to have continual fuel. So from both a monetary standpoint and from a technical standpoint, this thing has just been, I think, uniquely positioned to keep extending. I think a big part of the fuel is going to be we've been in a 2-year basing process for the bond market. Everybody wants to be bearish bonds, or at least long bond. They're talking about going up, rates going up, not down, and people are discouraged because the 10-year is stuck in this trading range between 4 and 420. I think we are poised for a move down to 3% and below in the next 6 months. So by mid-year, probably 3% and maybe below 3%. That's a big move to go from 4.15 or wherever we are today down to 3%. So one is rates down, and I don't care what the Fed does. Everybody wants to focus on the Fed. The bond market's, I think, ready to rally either way. Institutions are finally, I think, going to be all in. And they have, as I said before, they have fought this thing all the way up. Yep. And you keep hearing that there's a shortage of physical, that the paper dwarfs, and that there's a lot of shorts on the paper, particularly in the European banks. So who knows what happens there? I mean, so I'm watching that almost more out of fascination to see what really does come of that. I'm comfortable with my forecast, but I also know it could blow right through that.
Sure.
And then I just think the equity market this is history. I mean, I really do believe we're at the end of a 43-year secular bull market, whether it tops in April or tops in June, or again I have to extend. I don't think so, but it could. Any way you slice it, I think we're very close to a top relative to the fact that it started in 1982. And again, there's another thing. The Dow, Dow is what, 49,000, and that started this move back in 1982. Because I followed the Dow more than the S&P back then, so it's etched in my mind. I think it was 780 at the bottom in 1982. So it's gone from 780 to 50,000. I mean, this is one hell of a bull market. Silver a few years ago, people had no use for silver. And I was, as you well know, I was getting beat up for being a bull on silver. People were sure it was not going to get out of its own way because every time it lifted its head, it went the other way or it sell off again. And when you see that kind of sentiment, that should warm the cockles of your heart. You start thinking, hey, this thing might be attractive.
Last question, looking out to the year ahead, what is most interesting to you? Like, what do you have your eye on going through? Maybe not even the full year, that's kind of a long time, but let's say like the next quarter.
Yeah, well, I think it's a very interesting exercise here with silver. Silver, should be front and center for everybody, because it's moved, it's moved so quickly from 50 to 90. Um, and you've got people, I I had 75 as a target for several years, and I was way above almost anybody. There were people that thought we might double top at 48, but then there were lots of people that thought it couldn't get above 35. Um, and when it blew through 48 and 50, it was at 75 very quickly, and then kept going. It's paused for a little while, and next thing you know, you're at 80 and 90. There's one guy anyway, and maybe a couple guys out there talking 200 and 300. Now, I don't know if they really think you can get there in my time horizon, because I have a $500 target on silver. It's just not now. It's early 2030s. Um, but I think this guy, and one in particular, is talking about more this year. And like I said, if you go into a parabolic, there's no, I can't argue that that can't happen, that we can go to 200. I would have a hard time thinking that's what we'll do, but it's not impossible. And that's a big statement to say that an industrial metal, an important metal, a metal that's, certainly watched by a lot of people, could go from being $30 less than a year ago to something, 7 times that number. That seems pretty incredible. So I'm gonna be watching that like anybody else. I have 125 as a number, and that's pretty exciting. But I don't know what I don't know what the next few months brings. It could just blow through that. This certainly sounds like something could be imminent in terms of Iran. So people get nervous about it there. Could it run to 70 real quick and something like that? It could. I mean, geopolitical moves, who knows, in the very short term. But I think ultimately it would settle back down. Supply and demand forces would tell you that it's, unless it's a drawn out thing, and I don't expect that at all, supply and demand would tell you that it belongs in the 50s. Um, and then I think in a bust with an economy tanking around the world, it belongs in the 30s and maybe below that. So that's kind of my outlook. Um, and what I will say, and with respect to Venezuela, you hear a lot of people want to poo-poo the 300 billion barrels of oil, or is it billion or trillion? I don't know what it is there, that Venezuela controls. Their reserve, under their control. And people say, well, it will be, that's a 20-year plus type program. It's not going to influence anything. My forecast, as you know, is $500 oil by the early 2030s. And that means we come out of the bust with oil down in the, at 30 or below, and we start building up from there. In the first year or two out of the bust, you might be, 50, 60, 70. And then by the time you get to the end of the decade, you might be 200 or 150. By the time you get into, say, 2032, 3, you're at $500 a barrel. If you get oil moving like that, and you're getting it because of the massive money that will be printed to get us out of the bust, if you get oil at those levels, you're going to see all kinds of development, and having Venezuela available to develop rather than be under a regime that was basically taking the oil the other way, meaning Maduro. If you have a free market system down there, if you have a democratic Venezuela, that country, number one, is going to be like the Middle East was for so many years, rolling in money. Their citizens are going to say, "Wow, thank you, Donald Trump." But number two, from a world perspective, that really is a huge thing to have. You know, if you remember back 25, 30 years ago, peak oil, I think it was 20 years ago, whenever it was, peak oil, meaning we're running out of oil in the world. There's nowhere we're going to be able to develop oil to meet the demand. Obviously, that's not true. If you've got, Venezuela is one place to tap. So I don't buy into all the negativity saying, what's Trump doing? That oil's not going to be developed for decades anyway.